What's up, guys? Nick Rentier here. Going to be showing you a way to play earnings on options that is kind of, in my opinion, a little bit safer than holding through earnings. Still actually might be holding through earnings, but it's not super risky and not super 50-50 like a lot of the other plays are with options always. So this is a huge earnings week. We got tons of earnings coming out. See all these like little blue things or earnings. This was earnings that already happened, but the blue question marks, earnings coming out. Netflix did have earnings report last night. Today is the 17th, so it was reported on the 16th. I already had a earnings play that I put on a couple weeks ago. I'll show you, and did pretty well on, which kind of enticed me to make this video to show you guys and kind of show you a strategy that I use, and it's been pretty good. But I'll start, I'll start with Netflix. So here's what happened with Netflix. And so what I like to do, especially on some of these companies that are pretty solid, that usually have pretty solid earnings. Like here, they missed their earnings, but it wasn't that bad. What they do here, missed their earnings. Here, missed their earnings, but it still gapped up. Here, it pretty much stayed the same. Not much change. Here, gapped up. So earnings are kind of one of those weird things, because even though you can beat earnings or not, you can still get a gap up or down depending. Like, it's all just a crapshoot. But what we see with Netflix, besides this little point here, this last year, so about a week or two before, you see this little gap up. It's starting to ramp up. Then earnings come out. Here, started to ramp up. Earnings came out. And then here, I put this trade on, like here, right around here when they announced. I looked and I saw, oh, earnings come out in 2 weeks. So I put a vertical spread on here in anticipation that, and the stock was here at like the 285 mark or whatever, in anticipation that throughout the next 2 weeks it's going to kind of go up and up and up, and the price of the stock's going to get, the earnings are going to get priced into the stock, which is what happens a lot. You'll see the stock price slowly go up as earnings come, then earnings happen, and then it'll jump up or down or stay the same. So I bet that was going to happen with Netflix, and it did. It jumped up even though the earnings, I think they were like fairly good. What were they? Yeah, pretty much hit earnings and jumped up. So what I did, and I'll show you so I made $540. It was a 122% gain. A ramp up play for earnings that I called out in our chat room when I made it. So I bought it on the 3rd for 3. So I bought it here. So we'll zoom in. 3rd, I bought it here, and I did a vertical spread, and I did, alright, closed out of it, huh? So I did the 295, 292, 295 call. Alright, so I bet that by the end of this week, because it's the April 20th, by the end of this week, because earnings were on this week, that Netflix would be at or above 295, which is over here. This line that I actually have drawn at about the 295 level. And I put it on here when it was around the 280 level. So, or here, whatever, around the 285 level, or whenever I bought it throughout the day. And that way the option was out of the money, making me essentially more than 100%, making me 122%. It would have been like 125 had I taken it to full expiration. I made the max profit, which would have been, I would have sold it for $250. I sold it for like $245 instead. So, because I just figured it was going to ramp up and go up and up and up. So, it did go up and up and up. So yesterday, here was my thought process. It's kind of slightly in-depth options trader thinking. So yesterday, Netflix was up from when I bought it. So my option was up probably like $200, where it was like, yep, if I sold it yesterday, I would have got $200 back, which is pretty good. And you're thinking like, oh, $200, $200. And it closed at 305, 307. So 307 it closed at. And I was saying, I bet it's going to be 295. So that's a difference of 12 points. So let's say Netflix dropped from earnings. I was betting it wouldn't drop more than 12 points, because 12 points would have been my line. Or if it did drop more than 12, it would have recovered a little bit. So I could have held it and hoped that it didn't drop that much if it, the trade went against me on earnings. But turns out earnings came out and stock gapped up, and it made my 295 be like, well, of course it's going to hit within 295 by the end of the week. I was able to sell it for 245 instead of 250, because there is that small amount of chance that it'll take a dive and not hit it. So I locked in my profits and did that. So hopefully that made sense to you on like why I got out of it when I did, how I did. So now we'll kind of look at another one. Just actually getting ready for this video, I kind of came across Square. So if we see Square, earnings are 512. If we look at our calendar here, is that what it was? 5.2. So say 512 sounds a little long. So it's just if I make the trade tomorrow, it's 2 weeks out. So I get Friday Expo of the 4th is what I'd be looking at if it, plays out well. So if we look at Square, you see it Square's pretty solid. The trend's always up. You see the 200-day moving average just up, 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 down, and then up. Ramps up for earnings, comes down, earnings, goes up for earnings, up for earnings. So now it's kind of been trading sideways for a little bit, and even today it's just up a little bit, a couple points. 5% is pretty good, being up from yesterday's close even. So I'm going to look at this and go, all right, Square, in 2 weeks time, I bet it ramps up. We'll be looking around like the 52 mark. So I'll go like this. I'll check out Square, and what did we say? On May 2nd is the earnings, so we're going to look at the May 4th option chain. So the May 4th, here's what I go. What was I saying it'd hit around? A nice random middle number if it starts ramping up a little bit, 52-ish. 52 is pretty solid. I mean, that's pretty far out of the money. Go 51, 51 and a half. So if we did a vertical, we'd be looking at 20 cents to make 50. So $20 makes us 50, which is, well, 20 makes us 30 because we get 50 back. So that's a pretty good gain. Let me take out my calculator here. So 20 and 30. So yeah, obviously, got stupid sometimes, a 50% or 150% gain, because if we get 20 to 50, that is 150%. So be looking at that. So 150%, maybe get 140 if we sell it early. So I'd actually be looking at this. I mean, these are super cheap too. You get 20 bucks for one of the contracts. I'm gonna put this order in tomorrow. Probably get 10 of them. It'll cost me $200. I'll make 300. Actually, I might get like 20 of them. Cost me 400. I make 600. That's pretty good. 400 to 600's decent. If I put in 400, and I'm pretty sure, well, you know, I'd be getting my 400 back plus an extra 600. That's good. So I like Square. There's a free trade for you guys if anyone watches this video within the next day or two. So I think Square is going to be going up, and then whether it gaps up or down, actually it doesn't really have a tendency to do much on earnings, but it does ramp up for earnings. I mean, here didn't gap, here didn't gap. That doesn't mean it can't, but it really doesn't have a tendency to. So I really like Square for that. It's just the way I find stuff. You know, look at MasterCard. When's their earnings? 5/2, same thing. And they've been kind of going up for earnings. I think MasterCard's another one of those where it could go up like that. I really like a MasterCard play. Same exact thing. It comes out on the 2nd, so we'd be looking at the 4th. Just like this. You get 185. Would be testing their old high. So if we trade it, 185. Have them do the math for us real quick. 82 to get us 250. That's really good too. Yeah, so 82 gets us 250. Oh, so you're looking at a 205% gain there. That's really good. I'm gonna write that down and probably do a play on that too. So yeah, with the verticals too, you don't really have to worry about theta, the time decay, because you're picking it up on the backside. So because I'm selling one option and buying another, so really like this whole thing, if I did this 182.5, 185, the difference of theta is 2 cents. So my whole thing would be dropping only 2 cents per time, if that makes sense, which is pretty good. You know, instead of if I bought a single, it'd be going down, you know, 11 cents, all things equal, 11 cents a day. So that's just another way to play earnings if you know they're coming up, and you know a lot of times stock price ramps up for earnings. If it's a good solid company, a lot of times, you know, it ramps up for earnings. That's just how it does. People think it's, yep, it'll be going up, and you can get in early, you can get out early. You don't have to hold through earnings. You can get out the day before earnings if you're like, I'm up 110%. Take your profits. There's no harm in taking profits. You know, if you got 20 contracts, like I probably get with Square, sell half of them. Take your 100%. Boom. Your other ones that are just sitting there are now free trades. I mean, you're playing with house money. So that's what I'll be doing this week, next week. Be looking at stuff like that. I mean, it does tie up your money for a couple of weeks, but it is what it is. That's okay. You're making money. I'm calling out all my plays in my chat room too. So join chat with me if you're not in chat. Join chat. I'll post a link to the chat room. Check out all of Tony Ivanov's stuff. He's been killing it in the penny stocks. Just the beast. He's making thousands just hearing that Bob. $1,000 here, $1,000 there, like it's nobody's business, you know. So check him out, and if you're watching this on YouTube, like, subscribe, comment. Appreciate it, guys. Thanks.